Hi, thank you so much for joining me here today. It's been a while since I've posted a video, so I thought I would shoot a quick video to answer a very common question that I get all the time. So before I get started, let me introduce myself. My name is Jeanette Andrada, and I help private practice owners increase profit margins using tax and accounting strategies. So today I wanted to answer this question that I get all the time, which is how do I pay myself when I open up my own business or my own private practice? So this applies to all businesses in general. The first thing that you want to do is understand your tax structure. Now, one of the most confusing things, and that people confuse all the time, is when I ask them, what tax structure are you under? They always tell me, I'm an LLC. Now, something to keep in mind is that an LLC is a legal structure. It is not a tax structure. If you're an LLC, you could you're taxed as a sole proprietor, or you can opt to be taxed as an S corporation or a C corporation. So the reason I bring this up is because in order for you to answer this question and a lot of other questions for your business, you have to know what your tax structure is. So let's go ahead and get started to talking about what a sole proprietorship is. So a sole proprietorship is probably the most common tax structure, and it is the easiest to maintain. So it's also not the most advantageous tax-wise. So a lot of people think, oh, I'm an LLC. What are the tax benefits of that? And let me give you a little secret. There are no benefits, especially if you are or you don't opt to be taxed as an S corporation or a C corporation. And the reason being is because as a sole proprietorship, you are not an employee of your business, you are self-employed. What that means is that you are going to pay taxes based on the profits of your business. So let's take all the revenue that you made for the year. Now let's deduct all of your business deductions. Whatever's left over, that's what you will be paying your taxes on. And so it doesn't matter if you as an owner take out $1 from your business or if you take out every single dollar that comes into your business. It is not a salary, so you are not paying yourself. Any payments to yourself are considered owner's equity or personal draws, or investments or personal investments. So any money coming in or going out, those are just investments or those are distributions. So that's something to keep in mind. A salary, you never want to put yourself on a salary. So this is very common. I've seen this happen with some clients that come and work with me. They will, hire some employees and they will put themselves on payroll because naturally they're thinking, well, I want taxes to be taken out throughout the year. Well, the issue with that is that you're paying taxes now with your payroll and you're still going to pay taxes on your profits later on in the year. So that's a big no-no. You never, ever want to put yourself on payroll if you're a sole proprietor. So the time that you do want to put yourself on payroll, and by payroll, I mean you are a W-2 employee, taxes are being withheld throughout the year, taxes are being paid to the IRS throughout the year, right? The only time you want to do that is if you are an S-Corp owner or a C-Corp owner. And in this video, I'm just going to go over S corporations. So an S corporation is a tax election. So as I mentioned, you become an LLC and you will be taxed as a sole proprietor. Well, if you opt to be taxed as an S corporation, that in turn makes your business your employer. So instead of you being self-employed, you become an employee just like anybody else that you hire, and you now put yourself on payroll. You will get a W-2 at the end of the year, and all your taxes will be deducted. And the really great thing about an S corporation is that you only pay self-employment taxes, so FICA, Medicare, on your salary. So instead of paying it on your entire profits, you're only going to pay it on your salary. So if you could imagine, this is a really great tax strategy and it really gets me excited. It's not for everybody. There is a time and place for an S corporation. So I do want to, give that caveat. I have other videos that discuss S corporations if you're interested in learning more. But I just wanted to bring that up because it's really, really important. So again, how you pay yourself as an owner is really going to depend on your tax structure. So tell me, what is your tax structure? Now, once you make that determination, you could decide, okay, I'm a sole proprietor. And when you're a sole proprietor, you know what? It's easy. Just take money out of your bank account. I definitely recommend having a personal account that you transfer money, write checks out to yourself to a business account. And then if you're an S-Corp owner, then you want to make sure to put yourself on a payroll with the reasonable compensation. Now, again, I have more videos that discuss what reasonable compensation is, how S-Corps work. So go ahead and check those out. And yeah, so those are the things. I know it seems like a lot and it seems very complicated, but if you do need any help, you need additional assistance making determination for your tax status, or if you need help understanding this a little bit more, go ahead and schedule a free call with me. I offer a 15-minute free consultation where I go over your entire business situation and make recommendations based on everything that's going on, what your goals are, where you want to be. It's free, like I said, so just go to my link down below and go ahead and schedule a call with me. I look forward to talking with you. All right, well, until next time.